What is the S&P 500? So the S&P 500 is a stock market index made up of 500 of the leading companies in the United States. From the big tech companies like Microsoft, Apple, Amazon, Nvidia, to the big financial giants like JP Morgan, Goldman Sachs, and BlackRock. You also have consumer brands like Coca-Cola, Domino's, and Costco. So when you buy the S&P 500, you're buying a share of all these companies in a ready-made portfolio. So the way it works is the bigger companies have a bigger share of the S&P 500. For example, Nvidia is currently the biggest company in the world by market cap. So it has the biggest share in the S&P 500. Now, another way to think of the S&P 500 is to think of it as the Ivy League of stocks. So companies don't just get automatically added into the S&P 500, but there's a certain criteria for inclusion. This includes strong performance, profitability, stability, and market cap. So a company generally has to have a market cap of over $20 billion for it to be considered for inclusion. Now let's look at the performance of the S&P 500 since the 90s. As you can see, it has an upward trajectory. And one of the reasons is companies come and go in the S&P 500. So if a company starts underperforming and it stops meeting the criteria, it can get removed from the S&P 500. And if another company starts performing and meets the criteria, it can get included in the S&P 500. For example, Tesla was only added to the S&P 500 in 2020. So hopefully this has been helpful, and follow for more content.